Good morning, good afternoon, good evening, wherever you are in the world. Welcome back to our channel where we educate, teach, and help those who want to gain some knowledge in trading. And we also go through different market analysis. So today, I just want to talk about something different, something new. We're going to talk about liquidity in the high and low of a particular day, or let me say short-term liquidity in daily candles or dealing range. So for instance, if you have a candle, if you have a daily candle like this, you know that at the top or the low of that particular day, there rest liquidity. For example, this might be the low of the candle, and this might be the high of the candle. So now at the high of the candle there is liquidity, and then at the low of the candle there is liquidity. So what you might be expecting in the candle the following day, it's either to take either of the liquidity, either the top liquidity if the market is bullish, or the lower liquidity if the market is bearish, or if the market is a sell. So for example, let's say today the market is a sell. So what you would expect is for the market, either since it closed somewhere here, it might go down like this, up, take out this liquidity, and come and close somewhere here. So that means this market was a bullish market. Or in another case, if this market is a bearish market, let's say maybe it closed somewhere here, so it might go down, up, and close somewhere here, or maybe come back somewhere here. So that means this market was a bearish market. So this principle is very important. It can also be combined with the power of 3 setup, or maybe concept. Now let's see how we are going to apply it in the real market analysis. For example, this is a daily market. This is a daily market. So I want you to notice one thing. I'll be marking this chart candle by candle, candle by candle, candle by candle, candle by candle. I want you to understand one thing. So if you can notice, this market from here up to here, it was a bearish market, and each and every day the market had to make sure that it take the top liquidity, or maybe the liquidity at the top of each candle. Now let me show you exactly what I'm trying to say. For example, we'll start with this green candle here. This is the low of the day. If you can see it here, this was the low of the day. This was the high of that particular day. So what happened is that the next candle, the next morning, it had to make sure that it take out this high. It opened here with no wick, take out this high, and then came and closed at this level. So we know that this candle, like I just explained, it took out this high here with this wick, and then it came down and closed here. Now the following day again, we have to mark this candle again. We also put a mark here on top. So if you can check out what happened the following day, this market had to make sure that it takes out this high here with a very huge impulse up, and then it came and closed here. Again, the following day, we also have to mark this candle again, the high and the low of that particular day. So we have our low at this level here. We have a low here and a high here, like that. Now, the following day, this market did not manage to take out the high. Instead, it did not manage to go and take out this high. So meaning this day the market was bullish. Why? Because it failed to take out this high. It instead had to take out this low here. So I'll just mark it. It took out this low here with this wick here, and then it came and closed here, if you can see it. So I just want to highlight something for you guys, that and that. So the following day, what the market did, it did not manage to go and take out this high. It instead had to take out this low here and go into this imbalance here. It's a topic that we're going to talk about another day. So this is exactly what had to happen on this day. Again, if we mark again this candle again, like that, the following day, the candle was bullish. What happened? It failed to come and take out this one here. It instead pushed up, took out this and closed at this level. Again now, since this candle was too small and it was very hard to predict the other day whether the market was going to be bullish or bearish. So what happened is that now you had liquidity on both ends. So what happened is this market opened here, came down, took out this low here, and it pushed up, take out this high here. So that means it took both upper liquidity, lower liquidity and upper liquidity. Sometimes this case happens a lot. So those are some of the things that you have to pay attention to. And in most cases, it is called a Judas swing, where the market goes in the opposite direction first before it actually goes into the intended direction for the day. Again, we can repeat this over and over and over again. This will always happen each and every day. If it doesn't happen, that means the market is keeps on building liquidity, keeps on building liquidity. At the end of the day, any other day, it has to take out both upward liquidity and downside liquidity before it actually makes the intended move. So now we can repeat the same on this candle. You can see after this candle, it took out the upper liquidity and the lower liquidity. This one, it went up, and though you cannot clearly see it, it managed to take out this liquidity by an inch, creating another liquidity in the market, which is called like relatively equal highs. And then it dropped and closed here. The following day, before the market could make any move, it first had to drop down here, take out the liquidity here, and then goes up and close here. The following day, the market was bullish, bearish, I shouldn't know necessarily, because they call it a doji candle, where the market open here, goes up, take out this upper liquidity, and then come drop and close at this level here. The following day again, the market had to make sure that it takes out the upper liquidity, come and drop here. And then the following day again, the same thing happened. The market opened, dropped, it took out how many liquidity? The liquidity resting on this candle, and it pushed up and then it closed here. And then the following day again, it opened here, pushed down before pushing up, or I don't know, maybe it pushed up, take out this long-term liquidity. If you can see, this liquidity was not touched before, but it was taken out by this candle here. Let me just do this. Yeah, it was taken out by this candle here. It pushed up, then pushed down and closed at this level. Then the following day, the market opened, it pushed up first before literally pushing down. Wait, it was yesterday. Sorry, yesterday the market opened here, it pushed down before pushing up and close at this place. Now we have this doji like candle which has just formed. We don't know whether it is going to take the upper part or the lower part. Now our main issue for today is to predict which direction is this market likely to go. Is it likely to take out this low here? Then that means the market will be bearish for some time, maybe to take out this low and this low. So these are long-term liquidity, this one, and maybe this one, but we also have an order block here. So this would be our area of interest in a daily chart. This would be our area of interest in the daily chart order block. So we might want to see the market start dropping until this level. Why? Because it already took the upside liquidity. We would want to see it drop down to this level, because we have liquidity resting at this low, liquidity resting at this low, liquidity resting at this low, and consequently we have a gap here which hasn't been filled. It can be called an imbalance or a fair value gap. You want to see the market drop into it and eventually come into this order block and then push up like that. So now for today, like I said, our main aim is to see whether this market will take out this high or take out this low. Now we jump into 4-hour time frame to see exactly what we might be expecting during the day. If we can look at it carefully, we said in the daily candle, this is our yesterday's low, and this is our yesterday's high. We want to see if this market is going to take out this low or this high. So what we have to do is to pay extra attention to the price action that will be formed in between here. It is very important, very important to check out whatever will happen in this region here. So now let's try to drop further down, but we shouldn't forget that we've already labeled this as our order block or our area of interest in the daily time frame. This one here, if you can check it out, this here, we've labeled it as our area of interest or our order block. We'd want to see a scenario where this market drop like this, maybe come back to this level, drop to this level, then push high like that. But this scenario might not just happen just like that. No, it might take time to happen, or just from here you might find out that the market just drops like this, come to this level, go up. Another scenario that might happen that you might not be expecting is the market would just continue from here, go up like that. All those are possible scenarios. So no wonder we emphasize on paying extra attention to the price action at that particular day, at that point during the New York session or the New York Open. So we drop further into hourly chart. So if we check out in the hourly chart, we have another order block that we might also have to pay attention to. This one here, meaning for today the market might also want to play it cool like this. From this level here, take out this liquidity into this order block here. It might also want to consolidate a bit here because it cannot just pass like that, then go down like that, or it might come from this direction, come here, then push up like that, or it can just from here go up like this. But my main emphasis for now is this order block here. If you can check it out, this order block here is my main emphasis for now. So it is very hard to look for a trade like this. Why? Because this market is still within the liquidity range, upper side here and the downside here. So it hasn't made exactly a move. So we might want to see what we call a Judah swing. Maybe it drops down here, then go up, or it pushes up, take out this liquidity, then continue down until in this order block. So we don't really know. I can't give a direct prediction what is going to happen here. So what I would do is to come back during the New York session, New York Open, and see what will happen in the 30 minutes after 8:30. But here I would say maybe 16:30. I would see what will happen, whether the market will decide to drop. If it drops into this area, I'm definitely buying to this area, but I can't just buy direct. I have to see whether it will start making some break of structure, or maybe some market shift or shift in the market structure. So it drops here, I would want to see something like this. It goes up, come down, take out this little high, come back in this level, then I'll take it up like that. So this is the structure that I might be looking for in the lower time frame. Maybe this is 1 hour, maybe in the 15 minutes, 5 minutes, and maybe 3 or 1 minute. Definitely this is what I do. Like in most cases, I usually take my trades in 1 minute. Why? Because if I take in 1 minute, 1 minute or 3 minutes or 5 minutes, that means I'll reduce my risk, thereby capitalizing on the move, getting the largest reward ratio I can get, risking the minimal amount possible. Yeah. So this is the scenario that I might be waiting for. Or another scenario that is possible for today, this market might decide here when it goes, when it take out this, I want to see, because here at this level here we have an order block, I would want to see what form of price action that will play here. So if it plays something like this, it pushes, take out this liquidity here, maybe at this level, drop a bit, take it out, drop, and then when it comes into this area here, I might want to shoot it down, maybe down to this level here before it continues going down, up like that. So like the reason why I'm saying I'm talking a lot about up is because this market has been on an uptrend. So in a nutshell, it might be looking to make structures that might support its move to the upward direction. So this is what I have for you in the hourly time frame. We have the many points that we have located for now is this 1 hour order block, the daily order block, and what else? Okay, so for now, those are the two most important areas that you might need to look out for. But again, if you look at it on a larger point of view, let me just go back in the 4-hour time frame. When you come back into the 4-hour time frame, you will discover that now you have what we call we have another form of liquidity. We have what we call relatively equal high liquidity. So this relative equal high liquidity, others might call it double bottom, or not double bottom, but others might call it double top. So now this double top is like our area of interest again. So we would want to see the market doing this. We want to see a situation where the market goes up, take out this liquidity, here, maybe until this level or maybe this level, then drop down like that. This is also a possible scenario that might happen. It might not happen today, but it's something to look out for. Now let's try to drop further and further and further. Now we're going to 1 hour. We've already said something about the hourly time frame. We don't really know where the market is headed for today, but we have already marked our two daily liquidity, the upper liquidity and the lower liquidity. And now we try to drop into 30 minutes chart. In the 30 minutes chart, we can see that this market is still within the range. We don't know where it is headed to, whether the upward direction or the downside direction. We will still have to wait and see. So I'll make a video when the right time comes, or when it makes a significant move. We drop further to 5 minutes, trying to see what we can get. Still, for me, in the 5 minutes, there is nothing interesting at all for me today. I can't predict, I can't tell exactly what is happening today until the market either drops to this level, take out this. That's when maybe I might start thinking of making a setup or looking for a setup, or maybe it goes up, take out that high like that. Maybe goes up, take out this high into these levels here. I might start thinking otherwise. But for now, we wait, watch, and get entertained by the market. Learn new things, know something. And thank you so much, guys. I hope you've learned something today. We've talked about the daily range liquidity, the liquidity that lies on the daily high and the daily low. And we've also seen that each day that comes by, the market has to make sure that it either takes the upward liquidity if the market is bullish, and the lower liquidity if the market is bearish. And at some point, it has to take both upward and downward if the market is indecisive for that day. Or maybe the previous time we had a smaller candle, a smaller body candle, then the following day the market decided to take both the downward liquidity and the upside liquidity, or the upside liquidity and the downside liquidity. So if we understand the concept of power of three, those are some of the scenarios that we need to take advantage of. Yeah, thank you so much for your time, and make sure to subscribe, share, and invite your friends to this channel. I'm sure you're going to get the reward equal to the amount of time that you're going to put in. You're going to learn a lot from this channel. Thank you so much. Have a wonderful day as we wait to see what the market will do for the day.